Market continues to hold strong this week, despite increased concerns around the geopolitical landscape. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, April 19th. We know that selling or buying a home can be stressful and confusing. That's why we do these weekly videos so that you can know how the market is impacting your options as a home seller or as a home buyer. Let's take a look at how the market performed this week. There are now 23 active homes on the market, which is 5 less than last week. The average asking price dropped from $1,954,000 last week to $1,901,000 this week. 9 homes went pending this week, which is 2 more than last week, and the average asking price is about the same as last week, which is $2,313,000. 9 homes closed this week, which is significantly more than the 2 we had last week, and the closing price is also around the same as last week. Now the average closing was $2,253,000. So now that we know how the market performed this week, we can look at the broader trends that help us determine where the market might be heading. But before we look at those trends, if you do find this information helpful, you can subscribe, and that way you don't miss out on future updates. And why not share this with a friend also? Everyone deserves to be in the know about their local market. All right, let's take a look at the market indicators, shall we? Inventory dropped back down 5 homes this week. So we are still just sitting in this inventory sweet spot for sellers. Anywhere in the between 20 to 30 house range will continue to drive a higher than normal turnover rate, and therefore also tend to promote bidding wars for your house if you are selling. With the inventory dropping back down this week, the turnover rate returned to its rate of nearly doubling what a normal market turnover rate is. The turnover rate is now at 183%. Having a high turnover rate always points to the market favoring sellers, but the fact that it remains this high in the midst of climbing inventory over the past month really supports the fact that since the turnover rate typically drops with an increase in inventory, it really points to the fact that we are in a strong seller's market right now. The over-under number remains in the more than 7% over asking range this week. 7.4. Whoops. Get that. There you go. 7.4%. Or more than $130,000 over the list price. With the inventory and turnover rate holding steady, this over-under indicator is likely to stay in this high range for quite some time, significantly higher than last year. The 30-day rolling average is scratching at the $2 million average price range again. It jumped up from last week by about 4.5% or $85,000. The 30-day average did break $2 million last year before settling back down and ending in the 1.8 range or so. So it is possible that this market will do the same thing this year. However, I think the current market has a stronger chance of finishing strong as opposed to last year, how it mellowed out quite a bit towards the end of the year. Now, the stock market took a significant step back this week with all the news of escalation in the Middle East. The QQQ fund was not immune to that overall direction of the market, falling about 5% this week. In a vacuum, the drop in this fund could really give the market a pause, as a lot of buyers rely on their company portfolios for their down payment. As it is, any significant stock market uncertainty will cause consumer confidence to drop. So it's possible that despite all the positive movement in the market, in our housing market, that this stock market dip could put a short pause in our housing market. But that's not certain. And then, of course, there's the interest rates. They are the other major factor that could cause the market to pause. Its more recent growth. Rates have been floating in the 6 to 7% range for the past few months, with hopes that we would see some cuts this year. Rates climbed again this week, and we are back up above 7%, and they jumped 22 basis points, which is more than we've been seeing the bump up over the past couple of weeks. Not a hugely significant increase, but more than we have seen. And these higher than recent rates will continue to hold the market back from really taking off, which is actually good for buyers looking to break into the market despite the interest rates being so high compared to the recent past. The market continues to perform well this week. It readjusted after the little bit of reduction in growth last week and the week before. Home values continue to climb, inventory stays in the low range, and bidding wars are still very common. The lagging indicators keep improving, and the turnover rate and inventory continue to point to market growth. The only thing that gives me slight pause is that the stock and tech fund performance added onto the ever-increasing interest rates. If the stock market continues to struggle with the geopolitical uncertainty, that could cause consumer confidence to waver, which would in turn start to dampen the San Ramon housing market. But we're not there yet. Thanks for joining me for this week's update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so that you can stay informed on how this market is shaping up in this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend. We'll see you next week with a new update.